There's a brutal truth that the elites, the billionaires, and everyone at the top of the food chain quietly agree on. They'll do whatever it takes at any cost to stop regular people from ever building real capital accumulation. Primitive capital accumulation sounds fancy, but it's simple. It's when you have enough invested capital that you don't have to sell your time anymore. You don't have to trade 8, 10, or 12 hours a day for a paycheck. You stop selling your energy, your health, or your dignity just to pay bills. Instead, you live off the returns from your capital. That's the minimum level of financial freedom. And it's not the fantasy the media sells you no need for tens of millions private jets or McMansions. If your needs are modest, you can live simply maybe in a lower cost area. Say your monthly expenses are around $3,000 to $4,000 for a comfortable but basic life, with about $900,000 to $1.2 million invested in a diversified portfolio, following the standard 4% safe withdrawal rule. You could pull $36,000 to $48,000 a year without touching the principal. That's enough to cover your basics. You could wake up on a Monday and decide to read, travel slowly, or spend years learning something new. You own your time completely. But this is exactly what the system doesn't want you to achieve. Why? Because if enough people generate passive income and drop out of the workforce, who keeps the machine running? Who staffs the factories, the offices, the delivery trucks? Who grinds 40, 50 hours a week to produce surplus value for the owners? You have to understand this clearly. Capital doesn't create wealth out of thin air. It's just a tool that redistributes wealth from those without capital to those who already have it. For the system to keep working, it needs you trapped as a worker forever. That's why every part of capitalism, the media and advertising, social pressure, is designed with one ultimate goal: to prevent you from completing your own capital accumulation. Welcome to the channel, where uncomfortable truths are quietly examined. Let's make this crystal clear. Minimum financial freedom isn't the Hollywood fantasy the influencers peddle. No private islands, no Lambos, no seven-figure lifestyles. It's far simpler and far more achievable than they want you to believe. It's the point where your invested capital throws off enough passive income to cover a modest but comfortable life, without you ever having to punch a clock again. If you're willing to live sensibly, maybe in a lower-cost part of the country, without chasing status symbols, you don't need millions. Let's run the real US numbers. A single person living modestly in a low-cost area can get by comfortably on around $30,000 to $40,000 a year. That's covering rent or a paid-off home, groceries, utilities, basic healthcare, some travel, and even a little fun. In cheaper states like parts of the Midwest or South, real people do it every day, using the standard 4% safe withdrawal rule. The one that's held up through every market crash in history. You'd need roughly $750,000 to $1 million invested in a diversified portfolio. At 4%, that generates $30,000 to $40,000 a year without touching the principal. For a couple, bump it to $45,000 to $60,000 annual spend, still modest, and you're looking at $1.1 to $1.5 million. You wake up on a Monday and decide to read a book, take a slow road trip, or spend years mastering a new skill. Your time is finally yours. The small lesson here is this: financial freedom isn't about being rich, it's about needing less than the system forces you to want. Once you reject the lie that more stuff equals more happiness, the target suddenly becomes reachable. And that's exactly what terrifies the machine. But before we tear into how the system fights tooth and nail to keep you from ever hitting that number, let's first understand why it needs you broke and grinding forever. Here's the harsh reality. The system, the American capitalist machine, isn't broken. It's working exactly as designed. And its primary goal is to keep you broke, in debt, and grinding forever. Why? Because if enough regular people ever built real capital and generated passive income, The whole thing would collapse. Who would show up for the low-wage jobs? Who would staff the warehouses, the call centers, the gig economy apps? Who would keep producing surplus value for the owners at the top? Capital doesn't magically create wealth. It just redistributes it from the pockets of workers without capital to those who already own it. Look at the real numbers today. Total U.S. household debt has hit a record $18.59 trillion. That's an average of over $105,000 per household. Credit card debt alone averages around $6,500 to $7,300 for those carrying a balance. Student loans sit at roughly $39,000 per borrower. And the personal savings rate? A pathetic 4.7%. Meanwhile, surveys show 60% or more of Americans living paycheck to paycheck. These aren't accidents or personal failures. They're engineered outcomes. Wall Street, corporate America, and the endless advertising machine all profit from you staying trapped as a perpetual worker. The small lesson here is the system isn't neutral. It's rigged to extract from the bottom and concentrate at the top. Accepting endless grinding as normal is how they win. But once you see it for the trap it is, you can start fighting back. And the first trap they use to keep you there is the relentless propaganda of consumerism and social pressure making. You feel like a loser if you're not constantly spending. Here's the first trap they deploy with ruthless precision. Trap number 1. The consumerism propaganda machine and relentless social pressure. They don't outright ban saving. No, that would be too obvious. Instead, they make saving look outdated, stupid, and downright shameful. Through endless advertising, social media influencers, movies, and TV shows, they pump fake values straight into your brain. Money equals happiness. You need the latest gadgets, the trendy clothes, the exotic vacations to prove you're successful. You're only young once live it up, travel, experience everything. Spending becomes the measure of a good life. Enjoyment turns into a duty, and you buy into it because you're terrified of being left behind. You fear looking like a failure if, by 30 or 35, you don't have the new iPhone, the least luxury SUV, or those Instagram-perfect trips. You dread being called cheap or boring for not dropping thousands on concerts, festivals, or keeping up with the Joneses on social media. So you dive headfirst into the race. You spend everything you earn and more chasing those illusions. 10 years later, you're in your mid-30s with fancy toys, filtered photos, and a savings account that's empty. You've single-handedly destroyed your shot at building capital. You've done exactly what they wanted. The small lesson here is consumerism isn't freedom. It's the most sophisticated chain they've forged to keep you enslaved. Rejecting the pressure to spend is the first act of rebellion. But if this trap doesn't fully crush you, they have a second one waiting. The lifestyle upgrade scam that turns modest savings into lifelong debt through credit cards, cars, and massive mortgages. Here's trap number 2, the one that finishes off anyone who survives the consumerism barrage. They call it the lifestyle upgrade scam. It sounds positive, even responsible. Upgrade your life. You deserve better. But it's a calculated trap designed to drain whatever small capital you've managed to save and lock you into decades of debt slavery. It works like this. When you scrape together a little money, say, enough for a down payment on something small, they hit you with the pressure to level up. First, it's the credit cards. Average revolving credit card debt in America now sits around $7,000 per cardholder, with interest rates averaging over 22%. You think you're just buying convenience or rewards. But those high-interest balances compound fast, eating your savings before they can grow. Next comes the car. Average new car loan is over $42,000 with monthly payments hitting $748. People lease or finance luxury SUVs and trucks because you need reliable transportation or it looks professional. But cars depreciate the second you drive off the lot. You're paying premium prices for something that loses 20–30% of its value in the first year. Then the big one, the house. Average mortgage balance is around $252,000, with median home prices pushing $410,000 to $415,000. They sell it as building equity or investing in your future. But with 3–5% down payments common, you're signing a 30-year sentence paying hundreds of thousands in interest to the bank. You think you own the home. In reality, the bank owns you. Miss a few payments, and it's gone. You can't quit a toxic job to start a business or take time off because the mortgage chain keeps you grinding. The small lesson here is, these upgrades aren't assets. They're liabilities disguised as status symbols that reset your capital accumulation to zero and keep you dependent on a paycheck. Rejecting the upgrade scam is how you protect the little capital you've built. But the system has even quieter killers waiting. Things like student loans, runaway inflation, and hidden fees that erode your wealth without you even noticing the bleed. Let's expose those next. Here's the next layer of the trap. The silent killers that bleed your wealth without you even feeling the knife go in. These aren't flashy scams like luxury cars or big houses. They're quiet, relentless forces that erode your savings and capital over time, keeping you trapped longer than any advertisement ever could. First, student loans. Total outstanding student debt in America now exceeds $1.77 trillion spread across more than 42 million borrowers. The average borrower owes around $39,000 to $42,000, a chain that follows many into their 40s and 50s. Interest compounds while you're in school or on income-driven plans, turning an investment in your future into a lifelong drain. Many graduates start adulthood already underwater, delaying saving, home buying, or risk-taking. Next, credit card debt. Average balances for those carrying debt hover around $7,000 to $7,300 with interest rates over 22%. That's money vanishing into bank profits every month, quietly resetting your accumulation progress. Then, inflation. Even at recent levels around 2.7% annually, it silently eats purchasing power. Your savings buy less each year, forcing you to spend more just to maintain the same life. Over decades, it's a massive hidden tax on anyone without growing investments. Finally, the hidden fees in things like 401ks, average expense ratios, and management fees that skim 0.5% to 1% or more off your returns yearly. Over a career, that can cost hundreds of thousands in lost growth. The small lesson here is these silent erosions are deadlier than obvious traps because you don't fight what you don't see. Ignoring them guarantees your capital never accumulates. But once you understand how the system keeps most Americans stuck in the employee quadrant trading time for money with no escape, you'll see why so few ever break free. Let's map that out next. Here's the big picture that ties all the traps together. The cash flow quadrant from Robert Kiyosaki's book divides society into 4 groups based on how people make money. And the American system is ruthlessly designed to keep the vast majority trapped in the worst one. E, employee. You sell your time for a paycheck. Most Americans, over 60% living paycheck to paycheck, are stuck here. Trading hours for dollars with no leverage. Taxes hit hardest, wages taxed at highest rates. And if you stop working, income stops immediately. Self-employed. Doctors, lawyers, freelancers, small business owners. You own your job, but you're still trading time for money. Work stops, money stops. Higher freedom, but often longer hours and more stress. Be business owner, you build systems that run without you. Employees and assets work for you. Like Amazon or big franchises. Investor, money works for you. Passive income from stocks, real estate, dividends. The traps we've covered: consumerism, lifestyle upgrades, student loans, inflation. All exist to drain your capital and lock you in E or S. No capital means no way to build a business or invest at scale. The top B and I need a massive pool of E's and S's to keep their systems profitable. Examples: warehouse workers at Amazon, E. Uber drivers, S. Bezos, BI. The small lesson here is, staying in E mode isn't responsible. It's the default prison the system built for you. Understanding the quadrants shows why grinding harder in the wrong one never leads to freedom. The real escape starts with the opposite of what they've taught you. Aggressive saving to buy back your time and clear your mind for bigger moves. Let's break down how that actually works. Here's the real escape. The one thing that actually works against every trap the system throws at you. Aggressive saving. Not the weak, polite, save what's left nonsense they've brainwashed you into accepting. Real, ruthless saving to buy back your time and free your mind. The system wants you to think saving is outdated or impossible on an average income. That's a lie to keep you spending. No matter what you earn, the key is how much you keep. You have to break the herd mentality, the poverty mindset that says earn more, spend more. Cut the meaningless expenses ruthlessly. Stop letting vanity and comparison blind you. Every time you're tempted by the latest gadget or subscription, ask yourself, is this something I need or something they convinced me I need? Every swipe for experiences or upgrades, ask, am I buying freedom or selling my future? Even if you only save $500 a month at first, that's $6,000 a year. It won't make you rich overnight, but it buys something priceless: options. With $50,000 saved, you can quit a toxic job without panic. With $100,000, you can say no to soul-crushing projects. With $200,000 in a high-yield account, you can take 6 months off to think, plan, or pivot. Most Americans trapped in bills and debt never get that luxury. They stay reactive, worried about next month's rent. The small lesson here is, saving isn't about buying stuff later. It's about buying mental freedom now. A clear mind is the weapon that lets you see bigger opportunities. And once you have that buffer of time and clarity, you can use it to level up your skills and make the quantum leap in productivity that changes everything. Let's look at how that actually happens. Here's the phase that turns the tide, the quantum productivity jump. You take the time you've bought through aggressive saving and invest it in leveling up your time value. The system wants you stuck at the low end, where 1 hour of your work is worth pennies or minimum wage, doing repetitive tasks anyone can replace. But high-demand skills flip that script. You focus intensely for 3 to 5 years on skills the market pays premium for. Things like AI and machine learning, software engineering, data science, cybersecurity, or cloud computing. These aren't hobbies, they're levers that multiply your hourly value exponentially. For example, an average software engineer in the US pulls in around $140,000 to $150,000 a year. A solid data scientist or AI specialist often hits $150,000 to $180,000 or more. Cybersecurity experts command similar numbers in a field starving for talent. While your friends chase lifestyle upgrades, new cars, bigger houses, you stay hidden, grinding on skills no one can take away. Your brain, your expertise. This phase is brutal. You'll watch others flex on social media while you invest in code boot camps, online courses, or side projects. But after those years, the leap happens. Your productivity explodes. 1 hour of your work now equals 10, 30, even 100 hours from your old self. You command higher pay, freelance gigs, or remote roles that let you save faster. The small lesson here is time has thickness. Low value hours keep you poor. High value hours catapult you forward. Investing in skills is the only upgrade that actually pays compound interest on your life. And once that jump hits, you're ready for the final step, completing your capital accumulation and deciding how to shift quadrants on your terms. Let's wrap this up with the hard choices that come when you're finally free. Here's the final phase, the one where everything changes if you actually follow through. Completing the accumulation. After the skill leap, Your income surges. You aggressively save the surplus. Suppose after 3-5 years of focused upgrading, you're earning $150,000 to $180,000 a year as a high-demand software engineer or specialist. Real numbers in today's market. Live modestly. Save $70,000 to $100,000 annually. In 7 to 10 years total, you hit that $1 to $1.5 million mark for minimum freedom. You've officially broken the chains of the employee quadrant. You're no longer forced to sell your time. Now come the hard choices ahead. You can slow down work only on passion projects, take extended breaks, or semi-retire in a low-cost area with passive income covering basics. Or go bigger. Use your capital to build a business system, shift to B, hire others, create products, leverage teams, or invest aggressively, shift to I stocks, real estate, or startups where money works harder than you ever could. Examples abound. Tech workers who saved ruthlessly, then launched side businesses that scaled, or invested in index funds and lived off dividends. But most never get here because the path demands iron discipline fighting laziness, herd pressure, and the daily scream of consumerism. The small lesson here is, the system isn't evil or good, it's just a machine running its rules. You choose. Stay as the screw getting ground down for life, or learn the rules and become the one running the machine. The decision is yours, and it starts with the next dollar you save, not for riches, but for the freedom to think and live on your terms. If this hits home, start today. Reject the traps. Build the skills. Accumulate relentlessly. Your future self will thank you or curse you for what you do next.